Okay. Okay. All right. Okay. Oh. Okay. Hello there, traders. Welcome to today's webinar. And basically, this is your Wednesday's midweek review. And my name is Kenny Simon with you live from the Bretton Academy. And this event or this webinar is sponsored by 10 Trade, powered by 10 Academy as well. So I'll be always going through with you on the 10 Academy's platform or dashboard, so you will be able to have access to it on all the tools that you need. So with that, I would like to share with you quite a number of happenings that have actually been going on for the past couple of days since Monday. And because it's the midweek webinar, we usually go through a little bit of troubleshooting as well with your current trade. So I welcome questions a lot on Wednesdays especially. So with that, we want to also review the market of what's been going on for the past 24 hours as well when market opened today. But most importantly, we want to revisit a couple of trade ideas and also trade setups that we have actually talked about. So I want to share my screen and then we can get going on to the technicalities of these setups as well to give you some trade ideas, but most importantly to also discuss your current trades and troubleshoot these trades as well. So with that, I would like to share my screen and we can actually take it from there. Okay. Right, we've got a couple of setups on the 10 Trades MT5 platform, but before that, it's always wise for us to actually just look at market sentiments, just looking at what are the hot stories as of today. And on the dashboard itself, it will be powered, on the news section, it will be powered by Forex Mirror. So here, this is where I would like to also share with you on forexmirror.net. And here we are able to actually get a barrage of hot stories that are usually highlighted or showcased at the right hand panel, as you can actually see. Now let's talk a little bit about sentiments in the market. Now we have gone over the NFP as of Friday. We've also gone through on the movements of USD crosses. There are various trading opportunities right there, but we want to go over some fundamental breaking news, fundamental analysis first, sentiments analysis as well, and just to go over the hot news that have actually been highlighted as of today on Forex Mirror. Now here, for example, we can actually see or get hinted with quite a number of crosses right here, mainly because they're actually following some very big happenings on interest rate decisions by central banks. So for example, we have got the Bank of Canada, and here it's already hinted us that the Bank of Canada is to hike or hiking or increasing the interest rate. So they've also talked a little bit about the Australian dollar versus the Canadian dollar, ready for downtrend resumption, as it says right there. But of course, if we are just going ahead with reading the news and then trading, that is more or less gambling the market as well, because it's not sufficient. There's no sufficient ingredients to success. We've talked about that in our Monday session. So just to remind you that we've got ingredients of success webinar happening every Monday at 12 p.m. Cyprus time as well. So you guys can always join that on Monday. So this is where we will actually rewind or basically give you a bit of a flashback of what is needed to actually have you follow a trade plan, or ingredients that are really essential in a trade plan. So this is one of the ingredients right here, is to actually go on to news section, and we have got great news supply on breaking news via Forex Mirror. And here itself, we are able to actually pick and choose the top news and give us hints of what's been going on in the market. But just to match that on fundamentals, we actually need to go onto the tool section as well. And on the tool section, we will be having the top movers as well as heat maps all available and ready for you on the 10 Academy's dashboard as well. But here just would like to run through with you on top movers as of today. And today, as we've mentioned, is the 7th of September. And from looking at the top movers itself, it looks quite clear that USD JPY tops the list as well. And there's no coincidence that we are looking at the same thing basically on the Forex mirror as well right here. So on Forex mirror itself, as you can see, the first highlight was USD JPY in unstoppable rally meaning to the upside, and focus turns to BOC, and there you go, you have got the focus there on Bank of Canada right there, and then it's talking about USD JPY in unstoppable rally. So what we would need to do as well is to visit USD JPY to look at for ourselves what are the trend lines that are available, price action wise, psychological numbers, and various other things, right? So at this moment of time, what's essential in the ingredients of success within the trade plan is to understand the market sentiments, the feelings of the market, whether or not it is a risk off or risk on. This is highly essential, right? So here, for example, using a tool like the top 10 movers as well as the heat map allows us to cherry pick the right pairs or the right instruments, especially the Forex pairs, to actually trade for today. So it is essential for us to always have that reset type mentality in knowing that we need to actually start afresh for the day, to actually pick out pairs that have been initiated its volatility by the big boys, by big events, or anything that has been happening on the day. So it is essential for beginners especially out there not to actually get overly stuck with a pair that they think they should be actually trading for the day, because it's really important to understand that the market or the market's volatility, liquidity, and various other movements in the market are generated or initiated, triggered by the big boys and also by big events, even speeches by governors of central banks, for example, economic data releases. So it's essential for us to always visit that first stage, and that first step basically allows us to get more information on the fundamental aspects of happenings in the market, and that is really essential. Once we moved across from there, then we're able to actually pick out the right pairs, and once we've picked out the right pairs to trade, then we would transverse into the technical analysis scene, and then to conduct a trend analysis, and only then to conduct a technical analysis. So that's the whole flow right there. So on Mondays, when we talk about the ingredients of success, this is where I would emphasize on all these steps in detail. So that 30 minutes session would actually always remind you of your first few steps that you need to take within the price trade plan, the PRICE trade plan. So here, when we are doing it this way, this is called analysis or market analysis. If you're jumping the gun and once you've opened the your laptop, for example, or even your phone, and you want to trade and you jump straight into trading and analyzing the market technically, that would mean that you have actually skipped quite a number of essential or crucial steps within a trade plan. So a trade plan should be made of sequence of plans, a sequence of steps, sorry. So you need sequence of steps systematically to get all this information that you need to help you decide on whether or not to enter or exit the market or hold your trades and not enter at all. So this is really important. Okay, so let's talk a little bit more on the top movers for today before we go into troubleshooting mode on your trades, and I'll be, welcoming questions from you guys. So here, for example, we have seen USD JPY, going back and forth within the first five positions of the top movers right here. Now we have got the CHF JPY, Euro JPY, and USD JPY. But what's clear is that the JPY, or Japanese yen, is dominating the market at the moment on the interest by investors and traders. So investors and traders looks like they're really interested in trading and hiking up the volatility as well, with market participation into JPY crosses. So with that, we can always revisit the economic calendar for today as well. And today is 7th, just Wednesday. It's probably best for us to just also look at the whole week this week and make sure we apply the filters of only, I think I've got that already applied, so okay. Now we've applied that and we've got only medium to high impact volatility news, so we've got all that there. This is great to see that Monday is past. Tuesday we are on Wednesday, and Wednesday looks like, as we've mentioned on Monday as well, a very long docket of economic data releases. I think we've got a few speeches as well by Barkin and Mester from the US, from the Federal Reserve, and then we would see that we have got, this is interesting for us, and this is quite important for me to announce this. Sometimes it is not essential that when we have JPY news and only then JPY would actually sort of appear on the top movers, so there's a lot of questions out there as well amongst traders that we don't have any economic data or speeches relating to Japan, and why is it that Japan basically Japanese yen is basically one of the preferred pair to pay a lot of interest in either buying or selling. Why is it paid a lot of interest in trading JPY today? So this is a very good question, and I would like to re-emphasize this, that we need to understand the risk off and risk on element or characteristics of certain pairs. So JPY, as you guys know, as you all traders know, both girls and boys traders, is that the JPY is a safe haven. So perhaps there's some uncertainty in the market or the global market scene or global financial scene that would actually attract traders to pay a lot of attention to JPY. Now here, for example, if we look at all the JPY crosses that are predominating, I think we've got 7 out of 10 that would focus on JPY. So they are JPY crosses right there, and we could see that majority of the pairs have got a plus sign on the change. So that basically means that they are buying the CHF and then they are selling the JPY in this example in number 1. So it looks like it's the same for all 7 of the JPY crosses, which basically means that they are, the traders and investors at this moment of time are selling off the JPY. So what does that mean? That could possibly mean it's a risk of a risk on market. The reason is that if they were to actually be buying and paying a lot of interest into the Japanese yen, only then it would actually be a risk-off environment. But here, it looks like traders and investors are paying more attention or being more interested in trading risky assets at this moment of time. So hence the reason we have got USD JPY on a rally, and that rally basically is being triggered by inflationary change of policies and all that in the States. So that has been also covered on Monday during the Monday's session as well. So here we have got a little bit of tying in or connecting the dots, as we can call it that way. So connecting the dots of what is happening currently, together with what's driving the markets, as well as the market's trend, together with what's been paid a lot of attention to, which currency pairs, which pairs. Okay, so sorry about that, guys. Okay, so here on from 1 to 10, as we have mentioned it rightly, we have got JPY crosses, JPY predominating the whole scene in terms of interest by traders and investors, which is very interesting for us to look at today. But my concern or my focus when it comes to this table right here of top 10 movers are the 4 dots, whether or not we have got pairs that are giving me hints of trend clarity. This is the most important thing. When we have got 4 dots across the time frames right here, then we have got trend clarity. But again, we need to confirm and we need to go through the price trade plan in order for us to confirm it for ourselves as traders when we come to the point of analyzing the market in your respective time. Because all these ones here that are going on at this moment of time is just generic type sentiments or generic trend clarity that you can actually see. When you've got 4 dots right here, let's say for CHF JPY, is good for us. It's a hint or a trigger for us to consider CHF JPY as a pair that we can actually do further analysis on. Okay, so we've got CHF JPY right there, Euro JPY as well, very interesting. We've also got GBP JPY and also NZD JPY. Now these 4 pairs, I think as of now would probably be good for us to just visit the technical analysis side of it, but most importantly trend analysis first. So to conduct a trend analysis before we actually get deeper and conduct a technical analysis. So we've got CHF JPY to look at, Euro JPY to look at, and also your NZD JPY and GBP JPY. Now the GBP JPY is of course a little bit of a warning. It's also called the Twisted Sisters, meaning that they have got the highest sort of turbulence in the market when it comes to volatility as well. It could be highly volatile. You have got all kind of spikes going on with GBP JPY, and hence the reason it's also very important for us to apply the use of psychological numbers to keep us safe, as well as the usage of mother candles that I will demonstrate to you that it has actually been really useful, especially on Monday, and when we've done all these really beautiful analysis based on just psychological numbers, price action, mother candles, body of mother candles, we were able to actually lay out the lines very correctly with having all the touch points exactly on the dot as well on there. And congratulations for those who have actually hit TP on the various pairs that we've actually shared out as well. Okay, that's great. Now we would move into the second tool, which is your heat map, just to get a bit of an idea of trend side of it, right? So we've got a generic heat map right here, but I've got a couple of questions coming through the emails as well from my students, members as well around the world, asking me to cover a little bit more about how to actually use the heat map. So I'll start over in just explaining to you how do you actually read this heat map. It's actually very simple, but your focus should actually be all the currencies on the left. Okay, so this one here, the first table that you get of a heat map on Action Forex is that this one here covers a generic sort of heat map for all the currencies jumbled up, right? So the trend, and we've got it color coded. Now your focus should only be on dark blues and dark red. Now red or blue, the blue is your uptrend or bullishness, for example, right? And your red, only red is your bearish. But if it is dark blue, is strongly bullish, and if it is dark red, it is strongly bearish. Okay, so here we go. Now once you have looked at all this generically, what you can then look at is a uniformity. If you've got a column that has got all dark blue or dark red, that's the one to focus on, and that would actually give you hint on which pair you can actually pick to actually go onto your chart, your 10 trade chart, MT5, and start doing your trend analysis and then your technical analysis on, in order for us to start trading it. So this is the sequence that needs to be slowed down rather than jumping straight onto technical analysis and then picking out the pair out of the blue. For example, it won't be that effective in picking the right pair for the day to actually trade. So here, for example, we have got all blue, dark blue under JPY, which again, it coincides with what we have actually seen on the top movers as well. We've got all the JPY crosses. So here is giving us a hint that, you know, we have got a trend build up, trend clarity as well on JPY crosses possibly, but most importantly, we may experience volatility on JPY crosses. So with the volatility on JPY crosses gives us a lot of opportunities to actually trade as well, because if we pick one pair, just one clear trending pair, we are able to use correlation to actually trade or pick out other correlated pairs to actually trade with that one pair that we have picked. So the most important way of dealing with this is to firstly pick the right currencies, and then you combine the pairs, combine it to make up a pair, and then you will have a pair, right, to trade. So here, for example, always focus on currencies on the left. What this means is that we have got all these currencies, they are very strong or more bullish compared to the JPY. So here we could actually see JPY crosses to actually be a good pair to look out for in terms of trend analysis before we take it further into technical analysis and then trading it. So here on JPY, what this means is JPY is obviously weaker or more bearish, because we want to focus on all these pairs on the left first, right? So it does not mean that JPY is bullish right here, okay? It means that all these other currencies are more bullish or stronger than the JPY, or being on an uptrend or whatever you want to call it, but it's more it's having a more bullish sentiment, and it's strongly bullish at this moment compared to JPY. So JPY is strongly bearish against all the other currencies. This gives us a lot of opportunity. When you've got trend clarity as well, this gives us a better stand of doing or conducting the technical and the trend analysis. Okay, so if we go on one by one on USD, for example, we have got no straight row, the whole row, the whole four stacks there having dark blue or dark red. USD versus JPY, you can actually see it's good to analyze further, of course, because we've got three other time frames that are, dark blue right here. We've only got one on the 4 hour that is just red. So this is one that we need to pick out, of course. But when we look at Euro versus JPY, this is a better pair to quickly pick and do a trend analysis on. Also because we have got volatility possibly driven by economic data that will be released from the Eurozone as well. So let's quickly visit this economic data release, or the economic calendar for Wednesday, today, September the 7th. Now here, of course, we have got the GDP of Euro, so that would increase volatility. It's good that it's also showing that it's clear in trend on Euro JPY. So we need to attack this pair to do a trend analysis and see it for ourselves whether we have got a clear and strong trend and clear trend. Then we can actually move on to technical analysis, further price action using indicators to confirm, and various other things. Okay, so there you go. You've got Euro right here, as you can see. We've got a range of data coming out from the UK. We've mentioned on Monday about how GBP crosses would have a lot of opportunities, and true enough, we have got the 10 movers, 10 top movers as well, hinting us on GBP, JPY and GBP GBP crosses as well, which is a good thing. We need to take into consideration CAD. Now CAD would still have that correlation with oil's movement, other commodity currencies as well. So if you guys can remember, we have got commodity currencies such as the CAD, the AUD, the NZD, as well as the ZAR, the South African Rand as well. So every time we look at ways to actually connect the dots, if you guys can actually remember as well, we've talked a lot about when we look at the economic calendar and we have got Chinese data, we need to always connect the dot and look at movements with Australian dollar and also New Zealand dollar, because they are trade partners, right? So then we would actually be looking for trading opportunities, especially with Australian dollar and New Zealand dollar. So in this case, on Wednesday, 7th of September today, we don't see that so much in the Chinese data, even though we have got exports, imports and trade balances, but we have got it as medium impact. But in my opinion, it could potentially be high impact as well, mainly because we have got the GDP of Australia right here. So if you guys can remember, we have talked about this whenever we have got CNY data, we have got data revolving China, especially those high impact ones or very crucial data from an economic perspective. They usually would have Australian and New Zealand's data as well, announced. So here we have got, as you can see, tomorrow, Thursday, September 8th, they would be announcing exports and imports again. So here, I mean, on FX Street's economic calendar, I would grade these data as high impact. Should actually be red right here, but again, that's why it's important for us to not only filter out the high impact only on FX Street, for example, but it's important for us to just so that we capture all kind of data that is high impact, we need to include the medium impact as well. Because on different sites, it seems to have, different grade of high impact or medium impact. But the low ones, we can always take them off, but we need the medium and high impact news or economic data on there. Okay, there you go. So we have got Wednesday, as we've mentioned, we definitely have got volatility expected for the Eurozone. We've got quite a number of hot news, breaking news, talking about the economic situation, inflationary, dropping gas prices, hiked up gas prices and energy prices as a whole in Europe. And there's a sort of crisis that we are going through at this moment of time economically as well. So this is basically going to be giving us opportunities, especially for traders out there, to look at trends that are going to be only stronger. Now, trends could actually be uptrend or downtrend, right? So as it gets solidified by what is happening in the country or within the Eurozone, it would actually be posing us as traders trading opportunities. There we go, guys. All right, so let's take it further, just to give you a feel and a look of the 10 Academy's dashboard right here. As you can see, you have got all the happenings of webinars right there will actually be announced. So here, for example, let's now go through the heat map once again, and I want to just show you JPY. Look at how beautifully coded, rate coded, and they are all in dark red as well, giving you loads of selling opportunities of JPY. So we have got a lot of selling going on, but most importantly, we have got some great pairs to do a trend analysis on. For example, the GBP JPY, the Euro JPY, of course, CHF JPY, AUD and NZD JPY. So JPY crosses would actually be my focus for today as well. So I would literally go on to this section right here and pick out Euro JPY, GBP JPY, CHF JPY, AUD JPY and NZD JPY to then do a trend analysis. So we can do one or two together, and we'll take a look at whether or not we have got some great opportunities out there. I think I would start off with the Euro JPY first. We are on a Wednesday, but starting from late Wednesday evening onwards before market opens in Japan, especially on Thursday, what I find is that we have got a higher average movement of pips for Euro JPY, GBP JPY, and certain crosses as well, especially on a Thursday. I will talk about JPY crosses, and this is because of the east and west kind of closing of trades, and this usually gives us a lot of trading opportunities for Euro JPY in particular, having a higher or the highest average movement, average pip movements for the day. So usually the average movement for the day, average pip movement for the day for Euro JPY would be anywhere between 150 to 180 pips, let's say. But then on a Thursday, and giving us a lot of opportunities to trade, it would actually hike up to about 230 to 250 pips, average movement pips for JPY. So this has been, you know, proven and looked at many times over, and this has been happening every Thursday for JPY crosses, especially Euro JPY. Okay, so we definitely have got loads of opportunities on JPY crosses, and I want to look at Euro JPY as well, because we want to prepare and see whether or not we can actually trade tomorrow especially, and this will actually help us to gain more pips before market closes as well on Friday, and we want to look at how best we can do that. And this is how we are going to be planning our midweek review, what do you call that, sessions. And this is what we are going to do on Wednesdays. We need to actually also look at your trades, your current trades as well, how are you going to be adjusting it before tomorrow comes, and various other things, so that you can actually you know, move on to better trades, you know, cut down on trades that would be worth for you to actually cut your losses early, for example, and various other things that we can actually discuss. Okay, so before anything else, probably best for us to open up the floor for questions. Any questions for the next you know, 10-15 minutes or so, you can just come up with questions, as many as you can, and especially concerning your current trades. Okay, meanwhile, I'll wait for your questions to pop up, and I would go on to the Euro JPY trend analysis first, and we can also talk about certain trades, certain trade setups as well that I've actually announced. And let's get into Euro JPY first, just so that we can quickly do a bit of a trend analysis, hence because you need to strike the trade while the market is hot, right? So this is it. Okay. Euro JPY, it's right there. Let's start off with a trend analysis first. So we've talked about JPY crosses, JPY being on the weaker end, being very bearish as well according to the heat maps and various others. So hence the reason when we are looking at Euro JPY, we're looking at Euro being stronger or more bullish than the JPY, as we have seen on the heat map as well. Now this is why looking at the daily chart right now at Euro JPY, it's trading at 142.81. We want to look at JPY crosses when it comes to psychological numbers. We want to look at the point up, the two digits after the decimal place. Okay, so there you go. All right, we have got some questions, and coming from Annie Ambrose. And what are the meaning of those red color? The red color on the heat map, you mean? Is that correct, Annie? The red color. We have got red and dark red, blue and dark blue. So red means just bearish, but dark red means very, very bearish or strongly bearish. The same goes for the blue. If it is just blue or light blue, it means that it is bullish only. But if it is dark red, it means very, very bullish or strongly uptrend. If I've answered your question. You were talking about the heat map, right? Is that correct? Okay, perfect. That's brilliant. Okay, any more questions? Just fire up those questions while we analyze the trend of the Euro JPY. Now, this is really interesting. We have got bullish candle even on the daily chart, giving us a potential rise of prices. Now, on the daily chart itself, we'll rewind and go back to the 1 hour chart, 4 hour chart, and daily chart to do a trend analysis. But as the market is moving and I'm looking at the daily chart right now, I would just give you some hints that we are approaching the 80 psychological level anyway, because it's 142.77. What that means is that it may have a slight urge for the prices to reverse a little bit, mainly because of the psychological level at 142.80. We are only about 3-4 pips away at this moment of time. And from the candle itself, it gives us that hint right there that if you've got a wick growing longer at the very top, that means it's weakening to the upside, because it's left with the bones, you know. So it's not the body of the candle. So here, for example, if it were to actually move upwards a little bit more, then it would actually be trading and moving along the buying power of a single mother candle right here that basically has happened on the this year itself, in June. So that's a June movement, that mother candle right there. But that mother candle, a bullish mother candle right here, is worth about 180 plus pips, and that goes the same more or less with the next bearish candle right there. So what I'm trying to say is that we need to monitor this area right here and this area right here, because these peaks right here, this one here and this one here, are made of very powerful mother candles, both bullish and bearish mother candles, and they sort of in parallel in terms of having a line that would actually mark resistant area. So you see how beautiful that is. So that resistant area right here, I'll put it down a little bit and I'll mark it with the other side as well. And we have got 14390s area, and basically it's just giving you that powerful hint that whatever you do in buying the Euro JPY, you need to watch out for the 144.00 area. So whatever you do, it would probably be best to exit. And however excited you are in buying the Euro JPY, my opinion is that we would need to be a little bit careful as well. Okay, so Annie Ambrose is asking, how do I get this kind of app that signify this color red and blue? Well, we are having it all in the dashboard of 10 Academy. So 10 Academy will provide you with all the tools, the heat map, as you can see. We've got economic calendar, the various other tools, calculation tools and all that, all in one place at the 10 Academy. So if you have not, if you are not yet or have not registered with 10 Trade, then what you can actually do is just go on to 10.trade and register there, so you can actually then have access, and you will be contacted by your dedicated account manager to explain to you basically on how you can actually use the tools and attend the webinars, and basically we can mentor you that way. So this is going to be very helpful for you to use all these tools, but we will guide you. We've got videos as well available on the dashboard on how to use all these tools as well. Okay, thank you. All right. There you go. So again on Euro JPY, because this is quite a hot trading opportunity, I'll make it not only a trade idea but also a trade signal, meaning that I will be trading this as well live at this moment of time, because I look at prices that I want to actually enter as well, and what I can see is, looking at the daily chart itself, an ideal entry price would probably be at 142.90. But for those who are a little bit more conservative, possibly you can actually enter at 143.10. So let me just write that down onto the chart right here, so it'll be clearer for you guys. So entry, it's either at 14290, right? Or one to be more conservative, until it actually pierces through the 143.00 psychological level as well. Then you can pick a second entry, or you can actually be more conservative and wait until it reaches 143.10, or you could actually even take that risk as well in going at 142 if you want to enter early at 142.90, and then re-enter again as your second entry at 143.10. Okay, so there you go. We could actually be even more conservative, or give you some more entries at 143.30 as well, right? So you've got several entries following the principles of psychological numbers, and we can enter at either 142.90, 143.10, or 143.30. Okay, hope you guys got that. Now I'll just have that all here, right? There we go. Now let's talk a little bit about exit. Now here, as we can see, we have got the closing price and opening price of these mother candles right here, and I can see that it's 143.85 area. So my opinion to this is to actually look at your exit at 143.70 instead. So I'll just put a slight difference in your color, 143.70, and that is your, change that to purple just to mark the ideal exit right there, right? So there are also some choices in your exit price. So I'm just going to write that down, type that out right here as well. So here you've got your TP potentially, right? So we have got your 143.70 right there, or 143.90, as well as 144.10. Okay, so this is where you need to make that choice of your own, based on risk and money management strategies as well, your capital that is available, leverage that you have chosen, and various other things that we can guide you through as well, right, with it. So here we have got your entries and your TPs. Now a general rule that I use usually on SL is your 1-to-1 ratio, 1-to-2 ratio. So it depends on the pairs as well. So in this case, I would usually hike up the pips in terms of SL as well, a little bit higher than just the 1-to-1 ratio. So if you have got your entry at 142.90, let's say your TP 143.70, so you've got about 70, let's see, yeah, 10, about 70 pips or so, let's say, right? Minus the spreads and various other things, and perhaps you want to add your own strategies, and then you want to polish that entry yourself as well. Then let's say we are able to make about 50 pips, or potentially 50 to 70 pips, then your SL would actually be 70 pips minimum as well. If it's 70 pips in profit, then 70 at least minimum, but then hike that up a little bit to about 30-40 pips up. So your SL should actually be about, if it is 70 pips in profit, then your SL should actually be at least about 100 to 110 pips, just to give that cushion, because it is quite a volatile pair. And that's why I've mentioned as well, if you were to be trading tomorrow, then that impact would also be on the volatility of this pair, giving you more room that you need to actually adjust your SL as well, right? So your SL needs to be a little bit bigger tomorrow too. Okay, that's for Euro JPY. Now, any questions on this particular trade idea or trade signal, guys? before we open the floor again to more questions, and then we'll end the sessions if we don't have any questions. Any questions, guys? Euro JPY, as you can see, it's clearly stated right here on the prices that you can see on both entry and take profit. Okay. All right, if you've got any questions, just shoot your questions. Meantime, I'll just very quickly show you the end result of some of the trade ideas I've shared this week. And that was for gold. Very, very accurate, nice turnaround of price exactly at lines that we have drawn, days before. For example, on Monday, and then look at how it has actually just hit on the dot on lines that we've actually drawn based on support resistance levels. But these support resistance zones were based on opening and closing price of mother candles, as well as the wick, the highest wick as well. So that has been very, very useful, and also the use of psychological numbers for Forex pairs especially. Now, the psychological numbers are only applicable for Forex pairs and also oil, whether it's Brent or WTI. And the psychological numbers are used mainly for these categories of instruments for entry and exits only. So we've got another question. Keep the questions coming. This would be the best for Wednesday's session, is to have loads of questions about your trades. Also on any questions about the market or anything that you wish to know about trading. So we have got a question right here. Thank you very much, Rosaline. How can I identify the trend using the moving average? Fantastic question. And what moving averages are you using? Brilliant. So I guess that this is your first time attending this webinar with me, Rosaline, and we have got loads of video tutorials to guide you through on what I apply on my trades as strategies and indicators as well. So do go on 10.academy. So let's get to your question, answers to your question. Now, that's a great question right here. What I am applying as my moving average are the exponential moving averages. They're not the simple moving averages, they're the exponential moving averages. So the exponential moving averages are the 50, the 100, and the 200 exponential moving average. Okay, so this is basically it. So we have got, I repeat again, Rosaline, we have got the 50, the 100, and the 200 exponential moving averages. And how do we actually use this? Let me just rewind a little bit on how we do it, and I shall demonstrate that on Euro USD. So the best approach in using the moving average is basically to use it as a trend indicator. Now, in my years of experience in using moving averages, it's probably best to use it as what it's been designed for. It's been designed for indicating trend. So it's a trend indicator. So we've got various categories of indicators, right? So we've also got many strategies along the years, and lots of traders out there has been using the moving averages to cross over, and you probably, Rosaline, as well, would be bumping into reading materials and tutorials out there that basically talks about crossing and stuff like that. This is one thing that I've not done over 12, 13 years of my trading career, and that's basically the reason why we are able to predict the markets quite consistently as well. When we do a trend analysis, we use these moving averages only to indicate trend of that pair, and we are not going to be using only one time frame for this purpose. We need to actually compare and contrast 3 consecutive time frames at least. So in this case, what I usually do is to look at the cluster of candles on the 1 hour chart, the 4 hour chart, and the daily chart. So we need to look at the whole movement and the cluster of candles, whether they are under all the 3 lines or above all the 3 lines. And it's also very important for us to know and visually be aware of how the 3 lines are actually moving. If the 3 lines are moving in a nice three-way manner like this without touching each other, without being entangled to one another, without crossing each other, then it's got a nice flow to the downside, like a river flow to the downside, and we have got all the candles under the three lines. That basically indicates a probable downtrend or bearishness for Euro USD or any other instruments. You can apply these moving averages trend analysis on any instruments basically, but it's good to have 3 consecutive time frame, whether or not it is the 15 minutes, 30 minutes, 1 hour for the shorter term type traders, or you got a 30 minutes, 1 hour, 4 hours. So as long as you've got that 3 consecutive time frame, right? And if you do it more, you will get a better idea on the trends movement, and you can actually see it more as a story of the market of how the instrument is actually moving. So that's been a very, very useful approach for me as a trader, as well as the community of traders that I have mentored as well. And they see that this could actually slow down your rush into the trade as well, because psychologically it takes it's about 60% control over your entire process of trading, or the success of your trading actually is 60% governed by the psychology of you as the trader. So the psychology of trading does actually then gets connected to being more focused, patience and discipline in actually analyzing the markets first. So when you analyze the market, of course, you've got technical and fundamental analysis, but within technical analysis, you've also got trend analysis that most of the educators out there would probably not really go into that side of it. But that for me is the base of that Eiffel Tower. You need to have a good base to actually do that. All right. Victor, how are you doing, man? Good to see you. And if you've got something to share as well, Victor, please feel free to tag along and tag team with me, okay? So you're talking about moving average and on the same way for trend. Beautiful. That's great. Thank you for that, Victor. Brilliant. Because I think traders out there... Yes, sorry. It's Victor?
Yeah, thank you. Yeah, so
oh, thank you.
Basically, some of them, a lot of them are have done my training, and
amazing.
Moving average is always like apart from price action, market structure. Moving average is the next thing that we do to confirm a trend.
Perfect.
And I see you use ADX. I see you use the ADX as well.
Yes, I do. ADX is more of a strength of the trend indicator. So once we have selected the pair to have a clear and smooth trend, then we use the ADX to confirm the strength of that trend for that pair. Yeah.
So we also use the ADX as well for the same purpose.
Very nice. Oh, that's good. That means you have applied it very well, very correctly. That's good. Yeah. That's beautiful. Yes. Yeah. Because I've seen, maybe you have seen traders out there as well, especially beginners, they tend to get a little bit misinformed or miseducated in using indicators. So when we use indicators like this correctly, then we are guiding them to analyze the market correctly. They will get the closest trend possible. If not, they get quite confused with the market, but only because of misapplying some indicators as well. You right? Yeah.
Exactly.
All right. Good. Brilliant. Thank you, Victor. Take care. Thank you so much. Good. So welcome to the people who are attending my webinar first time from Victor. Thank you, Victor, for recommending them to attend my webinar as well. I appreciate that a lot. Also appreciate your questions, as many as possible would be beautiful, and I appreciate the questions that are coming, because it's helping the other traders as well to understand moving average. So here, for example, I just keep it really simple with moving averages again. Is that we need to look at two main things. We need to look at how the three lines are actually moving. whether or not they are moving like a river flow downwards or river flow upwards. Now, and then the candles need to follow as well the direction of these three lines as well. So when they are intact and they are compliant to one another and they look really clear, then they would actually be giving us the hint of clarity of the trend and the strength of the trend. So this is the reason why we are using three moving averages, the 50, the 100 and the 200, but we are using the exponential just so that it has a little bit sharper, what do you call that, mathematically and statistically, it's got a better form of using the exponential. Just slight change and slight, what do you call that, sharpness that we can actually get from exponential moving average. Because mind you, these exponential moving averages as well are the ones used in major media streams like CNN, Bloomberg, CNBC. When they are showing you, they're actually showing you the 50, 100, 200 as well. But they show you the simple moving averages most probably, but from experimentation of looking at how sharp the exponential are, I preferred to use the exponential moving average 50, 100 and 200. Also because they are very sharp in giving you the hint as resistance and support, because you can see how the peaks and the candlesticks, especially the wick or the body of the candle, would actually be finding these lines to be either resistance or support. Like here you see it's got nice resistance right here, you've got support on these lines as well. So hence the reason it's good to use it that way as well, to monitor and be aware visually, to look right, to look left. When you look right, you're looking center as well, of course, on the candlestick formation, the movement, the price pattern, but also on current price, to the right on psychological levels, and then you want to look to the left as well, to see previous mother candles as well, whether or not it's got more mother candles to the downside, bearish mother candles or bullish mother candles. Opening price of these mother candles are very, very powerful as well. Okay, all right guys, I think that's all I have for you guys, but if you guys have got questions, I can go on. So any questions, you guys and girls, sorry. Any questions? All good so far? That's for Euro USD. So we've got some trade ideas and soon to be trade signals, as I will be conducting some trades on Euro JPY especially, sorry, not Euro USD, Euro JPY on the buy side with the entries as I've mentioned and TPs. We can see that it's pointing to the right on the current price towards a close psychological level, but on the left I can see that the current price is cutting through very powerful mother candles to the left, especially on the daily chart. So sometimes you cannot see that on the 4-hour chart or the 1-hour chart, hence the reason it is really crucial for us to look at multiple time frames to get more hints of price action, market participation, strength of mother candles and various other things. Okay, all right, there you go. So in my opinion, it would most probably be riding to the upside following these two mother candles right here, because the body of the mother candle is really powerful. So it may be pushing interest and participation following past movements as well, and the past movements are based on mother candles, powerful mother candles of the past. So I think, from what I look at in the market, from analyzing it as well, we are having good opportunities on Euro JPY, but also we will be guiding you on how to look at correlated pairs with Euro JPY, so you are able to enter into multiple trades and then reap the benefit of having correlated pairs traded as well. So instead of just trading Euro JPY, you would be able to multiply or increase your trading opportunities and also profit opportunities by picking other correlated pairs. All right, guys, since you guys have got no questions for me so far, I guess you guys are very focused with the market at this moment of time, but feel free to send us questions. You know, me, Victor, Toby as well. All three of us are ready to help at any moment of time. So, you know, give us a shout and connect to your mentors, connect to all three of us as frequent as you want. And I'm sure that every one of us are happy to help at any moment of time. All right, guys, with that, I would like to end the session if we've got no questions at all. And I would like to end this session today and say a big thank you to you guys. Oh, we have a question. Good. Okay, GBP JPY. Let's take a look at GBP JPY then. Okay, give me a second. Let's yes, GBP JPY probably will do a bit of a trend analysis first, and as you guys can see that we have analyzed the market looking at JPY as the one that's weaker than all other pairs. So I would guess that GBP JPY would have a bullish type sentiment, but let's take a look together on this one here. So a Great British Pound versus the Japanese Yen. Now, true enough, it's looking very, very bullish. It's looking like it's got these powerful bullish candles, you know, going up and up and up. So maybe buying opportunities are coming through. But with any opportunities or anything that we are looking at this moment of time, we need to always look to the slight left of whether or not we have got any risk. Now, yes, true enough, it's got a very nice bullish candle, bullish mother candle. The body of it is appearing to be very bullish. But when you look to the left on a daily chart itself, we have got a threat of possible resistance based on this opening price and closing price of these two mother candles, both bullish mother candle and this bearish mother candle. So, and again, it is pointing out to the wick right there as well at 165.82. So 165.82 is bang on, only 2 pips away from the 165.80 psychological number. What does that mean? Very simple. You are at a very risky price at this moment of time where it could at any moment of time reverse as well. It would prefer to reverse in within 10 pips of the psychological level of 80. So what you should be actually doing is to if you have already bought the GBP JPY, to have exited as early as 165.70. That's 10 pips under the 80 psychological level, right? So this is exit strategy right now. So you would need to exit first before getting into the entry of a buy again. And that entry for a buy could actually be at 166.10. The reason for that is as it pierces through 165.80 and then it goes to 90, this would actually be a little bit of a trick as well to show you that, okay, it's got more bullishness to come. So us traders, retail, we get really tempted, for example, and then we want to enter. But are we entering at the ideal price? Are we entering at a safer level? That's the question to ask. So a better strategy, a better approach to do is to exit and re-enter a trade and plan your trade for your re-entering of a buy for GBP JPY. So that price for GBP JPY to enter a trade for a buy would be good at 165.90 as well, but it's a little bit too risky, mainly because of all these play that I can actually see here with very powerful reversals from mother candles. So I usually want to be careful with that. So an ideal price of entry for a buy, next entry for a buy for GBP JPY would actually be at 166.10. That's 10 pips above the 166.00 psychological number, right? Okay, I think I've got another question. Okay, you mean the linear weighted indicator on the moving averages, I think. Is that what you mean? the option on the moving average. I am not familiar, I must say, with that indicator. I've tried almost all indicators, but the most important thing is to ask yourself of what information you would want from that category of indicators. So we have got 4 categories of indicators, right? We have got the trend indicator, we've got oscillators, we have got volume indicators, we've got momentum indicators. So if you are wanting to know about the trend, then it would probably be good to apply 1 or 2 trend type indicators and not apply 4 or 5 indicators that are actually from the same category of indicators, right? So if you've got 1 of each, would actually be much better to give you that idea. So I'm not sure of the indicator that you've mentioned, but for me, I try to keep it really, really simple and not to use too many indicators that would actually create more noise for me in the market. At this moment of time, I don't use any indicators to actually enter and exit the market. So I'm entering and exiting the market using psychological numbers as well as price patterns like the geometric patterns. So that's how I enter and exit the market. So indicators are mostly used for me to indicate the trend as well as to know how strong that trend is. So hence the reason I've limited my usage of indicators to moving averages and the ADX and sometimes the stochastic. But the stochastic is an oscillator, and I use that to actually help me or hint to me whether or not there will be a divergence that indicates a trend reversal. When I'm confused about the market a little bit of whether there will be a reversal, moving average or linear weighted. I'm not 100% sure, but mainly because I've done about 7,000 to 10,000 experimentation on charts. So about 10,000, instruments on all that on the moving averages compared to all other, moving averages. And I found that the exponential moving averages fitted with my approach and my strategy much better than the other one. So hence the reason I stick to that. Okay, we've got another question. Okay. All right. Hi there, William. I've mentioned that already in the video, so it's recorded. You can always look back, but I will answer your question as well. It's the 50, 100, and 200 exponential moving average that I use. Okay, so it's the 50, 100, and 200 exponential moving average. Okay. Okay. Hope that's clear for all. Now I'll be releasing some videos in my channel as well to actually give you guys more guidance on more trading opportunities as well. So I'm eyeing most of the JPY crosses at this moment of time, and starting from market open, I've monitored the market and seen that we have got at least 4 to 7 pairs and setups to look at on JPY crosses. And once the US is open as well, or the US market is open, I think we are going to see a clearer momentum and clarity of trend as well for these JPY crosses. So I wish you guys all the very best and happy pipping for loads of opportunities, especially the JPY crosses for today. And we'll see you guys again on Friday's session. If you guys have got no questions now. I've answered all the questions, right? Yeah. All questions answered. Brilliant. Thank you so much. Okay, so with that, I would like to thank you guys and girls for your time, and we'll see you guys on Friday's market wrap-up session. I've got loads to install for you. And meanwhile, while we wait for Friday's sessions, I'll be releasing 1 or 2 videos as well to give you the indication of trading ideas and trade signals as well. All right, guys, with that, I want to say a big thank you once again for your time, and